Check it. Alright guys, what is up? You are back with another video with Data Zero, and in this video we're going to look at the fundamental analysis and technical analysis for AMC stock. We're going to go over the data, analyze that, and I'm also going to tell you guys about potential outcomes from converting APE to AMC and the 10-to-1 reverse stock split, and my personal opinions and views on those two things and why they could be potential benefits to the MOAS. So let's go ahead and look at the facts, the charts, and data and see what we have going on. Guys, you are back with another video with Data Zero, and in this video we're going to look at the technical analysis and fundamental analysis, analyze that data for AMC, and come up with a prediction. I'm also going to give you guys an update on what I think about the 10-to-1 reverse stock split and the APE to AMC conversion and possible benefits or cons and pros of those two things. So let's go ahead and hop right in with the technical analysis with AMC and get started. So guys, we have to look at this bear flag. It would be foolish not to see this bear flag. A bear flag is a very, very typical pattern that you can see in the stock market. It's when you normally get this pull after a large move down, this sideways consolidation like this, and then it normally breaks to the downside. Okay, so what I am looking at is a bearish scenario for AMC. I know that people don't want to hear that, but guys, you have to look at the facts. In ways, I know people don't like day trading as far as AMC is concerned. Most apes don't like day trading as far as AMC, but while you're waiting for the MOAS, why don't you figure out how to learn these trades, which I can help you guys do. Learn these patterns, learn these candle patterns, and then when it hits these lows, buy the lows of these rallies, even with shares, because calls are a little bit risky. I know some people like call options, but I would suggest possibly just buying some shares and then buying these lows, and look at these gains that you can get off of those lows. Just a little side rant for you guys, like there is a lot of potential gains that you can make off of these rallies if you buy the lows and you can figure out where these lows are. So I am looking at AMC to come down and retest this $3.70 level or $3.50 level. I'm expecting that to happen, and then we'll probably get a bounce. I am expecting AMC to close around $3 to $5 at the end of this week. So low would be $3 and the high would be $5 at the end of this week. If this bear flag cannot consolidate sideways, and we cannot keep consolidating sideways for the remainder of, let's see, this week, it would have to be at least tomorrow, so Tuesday, Wednesday, and Thursday. If we cannot get past that, we are going to break to the downside. And I think once we get the FOMC meeting and all of that stuff here on Wednesday, if you look where the tip of this bear flag meets, so here's Tuesday and here's Wednesday, this is where the tip of the bear flag would be on Wednesday, breaking to the downside. We'll probably get bad news Wednesday on the stock market and break to the downside, and it will break this bear flag. So if you show me the news, I will show you if you show me the charts, I can show you the news. That's a thing that I like to say, because these patterns typically play out right when news events do occur, and if you start to chart these things, you will see those types of things. So guys, this is what I am looking at for AMC on the short term. So basically, things could keep trending down or sideways into the 10-to-1 reverse split until about April 27th. Now, possible benefits of the 10-to-1 reverse split, I cannot tell you just yet. I'm doing more research, and I will keep looking into those things. But possible benefits of AMC, or converting APE to AMC, are that AMC gets to pay off some of its debt, and this would fundamentally destroy the short thesis, getting all of the institutional shorts out of this play and destroying the short thesis, making the shorts cover because they have no reason to short, causing the MOAS if AMC pays off the debt. So that is a potential good thing from this. Also, the conversion itself. So when they convert APE to AMC, One thing that could benefit apes is also you could get that arbitrage trade, so anyone can play the arbitrage trade because ape will convert to AMC's price. That will so if you buy ape at whatever price now, like $1.20, $1.25, it will, or $1.30, it will convert to AMC at $4.25 if the conversion was today. So whatever price the conversion day is, that is what's going to happen. So that is a benefit, as well as the conversion itself. So they have to check each individual QSIP number. They have to check each individual QSIP number of APE to convert it to AMC. And when doing that, that could potentially expose the synthetic shares and trigger the potential MOAs. I do think that the hedge funds are potentially afraid of this move, and this could be something that could benefit us. I do know one benefit of making APE was that shorts had to open up new short positions on APE. So now that they're short on AMC, they had to go short on APE as well, and they tend to short APE even more. So it made them a lot more in this trap, and it could potentially be a I hate to see it, but I hate to say it, but a genius move. It could potentially be a genius move from Adam Aaron. And I criticize him a lot, but I have to be critical and criticize everyone and look at every aspect and keep an open mind. So that is why I'm willing to give you guys opposite opinions and tell you guys when I was wrong. And I will say that this potentially could be a genius move by making them double down on their short positions using APE, and then when it converts, exposing all of the shorts when they have to check the QSIP numbers. So that little rant is just what I think about the APE to AMC conversion and the 10-to-1 reverse stock split. I will be doing more research on the reverse stock split and potential benefits of that, but I don't know as of now, so I can't openly just say, hey, this is what it is, guys. But that is what I am thinking about the reverse stock split. So I want everyone to be prepared for this downside, that they're going to try to shake you out. They're going to try to bore you out of the play. While we are waiting, I'm going to help you guys to try to identify lows, maybe make some monies off some swing trades while we're waiting for MOAs. But right now, there is no potential buys that I can see, because we are probably going to see more downside on AMC. And I know that's not what you want to hear, but that is just the truth. So I gotta keep you guys informed and gotta keep it real with you guys. Now, potential things that we could see that could push us to the upside are the bullish data that always remains in the background. So we always have this gamma always apparent in AMC's option chain. If you look at the options chain, they love to keep us down below $5 or $6, because if we can get above $5 or $6, you see that we clearly have a gamma ramp up to these higher levels, which could allow AMC to get out of control very, very fast. And you guys were reminded with last week's price action just how crazy AMC can get and how quickly this thing can start to run. So watch out for those critical levels of $5 to $6, because if we can get above those critical levels of $5 to $6, we can push up to these higher zones and then potentially to the golden zone and see the MOAs. Now, again, I always tell you guys that we don't need to be at a certain price point to squeeze. Just like Volkswagen or any other short squeeze, it doesn't really matter where you take off. Normally, they don't run up like this. They actually take off from a low. They take off from low RSI. A short squeeze normally happens after a large dump and then a huge pump comes. It's called the spring. It's kind of like a Wyckoff thing, and it actually kind of looks like what's happening now with AMC. We could see like a huge low, a new 52-week low, and then absolutely take off into the stratosphere. And these are things that happen in the stock market. If you guys look at the history, look at Volkswagen short squeeze, look at other short squeezes that occur, there is normally a massive dump before the takeoff. Now, again, we have the short interest at 24.39%. Plenty of short interest for a short squeeze, in my personal opinion. And if you look at stocks, a lot of stocks squeeze off just 8 to 10 short interest. We have 24.39% short interest, which is absolutely outstanding, and we have plenty of short interest for a short squeeze. Also, if you look at the shorts available to borrow, so the shares available to borrow, it looks like recently they have been not available, getting very many shares available to borrow. Maybe they've been having troubles because the cost of borrow rate is slightly going up. You did see a little bit of it coming down today, but it is slightly going up, so we could get some bullish momentum to the upside if we can break out of this bear flag, consolidate, through Wednesday, Thursday, Friday, consolidate through this week, or maybe potentially even break to the upside. If we can do that and get this bullish momentum upside, then we could see a push to the upside. And again, that gamma could come into play, the cost of borrow could come into play, the FTDs could come into play, because we do have FTDs coming home due all of this week, which are shares that have to be purchased out of the open market because of T plus 35 close out date. So this is all very, very bullish momentum and very, very bullish data for AMC that you always have to keep an eye on what's going on in the background and know that we could launch at any time. So guys, this is basically the video. Again, my price prediction for the end of the week is about $3 to $5. So $3 for the low, $5 for the absolute high. I'm hoping that we can consolidate sideways out of this bear flag, but if not, I think we are going to get a sharp move down and then get a nice bounce from there. This is the bounce that everyone thinks we were going to have here, a sharp bounce here, but I think we're going to have another move down and then get a, so here's follow my mouse, bounce around, get a sharp move down, and then move to the upside from there, and then probably close the week about flat. So that is what I'm thinking is going to happen. That is my prediction for the rest of the week. Hopefully you found this video informative. I know I did. If you did, go ahead and drop a like, subscribe for more content, and as always, have fun, stay safe, make money. Peace out. All right, guys, that was the video. Thank you for watching to the end. Remember, potential benefits of changing APE to AMC is the DTCC has to check in each individual QSIP number, and that could potentially expose synthetic shares. And also, the move itself helps pay off the debt, which could expose and kill the short thesis. So these are all two potential benefits that we could have from the conversion itself. As far as the 10-to-1 stock split, I don't really know, and I will be doing more research to see pros and cons and benefits from this. But as always, have fun, stay safe, make money. Peace out.